key areas we're going to look at today include trends and developments impacting the business performance of U.S. enterprise operators. We're going to take a look at how U.S. enterprise operators are performing relative to each other in revenue. And we're going to take a look also at how U.S. operators are positioning to capitalize on B2B opportunities within key growth areas. So this next slide here, so this is an overview of TBR's telecom research. So most of the content from today's presentation is going to be taken from the U.S. Telecom Enterprise Operator Benchmark. So this is a semi-annual report we publish twice a year, the latest iteration for 2Q24 that just published last week. So this benchmark compares the revenue performance of U.S. telecom and cable operators in the B2B market and key trends impacting this segment. So looking at this next slide, so this is a table of contents that was in the 2Q24 benchmark. So you can get an idea of the type of content that we cover in the report. If you look at the market assessment section, so we take a high-level look at things in the B2B market, such as key findings, enterprise revenue market size, enterprise operator market share and revenue. I take a look at some key growth segments. I also have like dedicated scenario discussions of some of the latest, hottest topics in the market. Also take a look at key acquisitions, key alliances, and customer deals in the segment as well. Next segment is service segment performance. So we dive more into revenue performance in this section. So we have breakouts comparing the leading enterprise operators in areas such as total enterprise revenue, wireless revenue in the B2B market. We also take a look at FWA in the B2B market, comparing B2B connections in FWA, how AT&T, T-Mobile, and Verizon are comparing in that segment. We also take a look at wireline revenue in the B2B market as well. And the next section, we have a breakout on customer segment performance. So these are the sub-segments within the B2B market. Just for clarification, so today when I talk about enterprise or total enterprise, and also on the report as well, that refers to the total B2B market. So all types of customers you would find in the B2B market. And that's comprised of 4 different segments. So that would include large enterprise. So that would be a business with over 1,000 employees. And then we have SMB, so that would be under 1,000 employees, would fall under SMB. And then public sector, so public sector would include federal agencies and also SLED. So state and local agencies would fall under that, and also public education would fall under that too, K through 12, and public universities as well, state universities. We take a look at wholesale revenue in the report as well. The report also features some dedicated profile slides to some of the leading players in the B2B markets. That would include AT&T, Charter, Comcast, Lumen, T-Mobile, and Verizon. So jumping in today's content. So looking at this slide here, so we got 2 graphs on the left. So we have a table at the top left is U.S. operator enterprise market share and revenue. So you can see how the operators are ranking in this table. And we also have the pie chart below, so it's listing out the market share within the U.S. operator enterprise market. So looking at these key tables, you can definitely see that AT&T and Verizon are still leading this market by a pretty significant margin. So about 50% market share between AT&T and Verizon in the B2B market. Drivers for that, historically, they've had a very, strong footprint, very strong entrenched relationships in the B2B market, especially in the Fortune 500 companies, the larger enterprise type of businesses. That's definitely been an advantage for AT&T and Verizon. And they both perform well in wireless and wireline revenue as well. If you were to look at their competitors in the B2B market, like an operator like Lumen, for example, they're predominantly a wireline company, or looking at a company like T-Mobile, it's predominantly a wireless company. So T-Mobile and Verizon definitely have the advantage in having very large and robust businesses in both wireless and wireline revenue, but definitely facing some challenges. As you can see, some single-digit revenue declines in 2Q24 for AT&T and Verizon. AT&T declining by 5.5%, Verizon declining by 2.4%. So there's some challenges, especially in the wireline division. Looking at their customer base, there's still a lot of customers are still on those legacy wireline solutions. Talking about legacy wireline solutions, we're talking about some of the older network technologies out there, from broadband and maybe like DSL connections, the slower like broadband connections for voice, it'd be things like POTS. Still a lot of customers are on those solutions. There's a lot of quarterly disconnects happening from that. So it's been a challenge for AT&T and Verizon. It's a similar challenge for Lumen as well. So you can see 11.3% decline in TQ24. Same challenges. So large base of legacy solution customers they're facing disconnects from. Also, Lumen has had some, some pretty major divestments in the last several years. They sold off the Latin America business. That was about a couple years ago, and about a year ago, they sold off their EMEA operations. So some revenue impacts from those divestments that we're seeing from Lumen. So it's been challenged by about double-digit revenue declines in the B2B market the past couple years or so. Then looking at T-Mobile, so you can see a 9.5% revenue growth from T-Mobile. They're ranked as the fourth largest player in the telecom B2B market. So we're seeing them experience the strongest revenue growth in the segment. I think a big driver of that is just the improved network reputation that they have. Going back to the LTE era, AT&T and Verizon definitely had the advantage in LTE, where T-Mobile was predominantly just relied on, competitive pricing to attract businesses. 5G era, they've definitely had the network advantage. It's definitely been helping them attract clients, especially post-Sprint merger. So it's definitely improved wireless network reputation. It's been a big driver for them, having a strong turnaround in the B2B market. And then looking at Comcast and Charter, so you can see they've been pretty consistent in revenue growth, usually, low to mid single digit revenue growth we're seeing from Comcast and Charter. So they're still growing pretty consistently, but definitely some challenges in the market they're facing, especially from the FWA. Operators such as Verizon and T-Mobile getting a lot of traction with FWA in the market. So it's been a challenge to the cable providers. I'm going to dive a little bit deeper into that in some of the later slides. So looking at the right side, so we're looking at overall revenue growth drivers impacting the market. So some of the beneficial trends that we're seeing the wireless customer additions for smartphones and other devices. So wireless is still performing very strong overall. Most quarters you're going to see positive net additions from things like smartphones. That's definitely been helping to drive B2B revenue growth. Also seeing another positive is customers migrating to higher tier service offerings. It's basically step ups to higher tier plans. For mobile, it might be a type of premium unlimited data plan, might cost a little bit extra but have added features, might be like higher hotspot limits, those type of things. And broadband, it might be steps up, customers stepping up to higher tier broadband plan, faster fiber speeds, those type of things. Those things have been very beneficial to revenue growth. Public sector has also been a strong contributor, especially first responder initiatives, things like AT&T FirstNet, Verizon Frontline, that's been driving growth in the market. Also, a lot of large-scale federal task orders being awarded the last several years, especially looking at things like the GSA's EIS programs. That's basically a $50 billion 15-year network modernization program within the public sector led by the GSA. So seeing a lot of large-scale contracts being awarded under that, that's been very beneficial to enterprise revenue as well. We see the FWA subscriber net additions. That's been beneficial. The operators, the telecom operators, having some pressures to the cable operators though. Price increases. So we've been seeing that. That's been happening both in the consumer and the B2B markets the last several years. Part of that's just inflation. We see the operators having higher operating costs because of inflation. Those rate increases are helping to partially offset that. It's been driving revenue growth, and we're seeing some early revenue too from some of the more emerging segments like IoT, MEC, which stands for multi-access edge computing, and PCN, private cellular networks. Some early revenue we're seeing from that as well, but overall market is still a pretty minimal portion of revenue in B2B so far. And we're looking at the revenue growth inhibitors. So some things challenging revenue in the segment. So legacy data solution customer disconnects, especially for AT&T, Verizon, and Lumen. Asset divestments. So I mentioned the ones Lumen has had in the past couple of years. Some other ones in the market too. One being AT&T. They spun off their cybersecurity business recently. So they had a revenue impact in TQ24 from that. Another thing we see negatively impacting revenue would be customers disconnecting from fixed voice services to use wireless offerings exclusively. You look at businesses, more smartphones are being used by the employees, so there's just less and less of a need to have a fixed voice connection for many businesses that's been hindering revenue, and also seeing disconnects from solutions that were activated during the pandemic but are no longer needed. Education is definitely a prime example of that for a vertical, especially like looking at the pandemic, the move to remote learning for many schools, a lot of activations during that time period, remote learning solutions, things like tablets, hotspots, those type of things, a lot of activations during then. But since then, a lot of those solutions aren't needed anymore. So you're seeing a lot of disconnects, especially within education from those type of solutions. So moving on to the next slide, so this is going to give us a bigger picture look to see how the enterprise revenue has been trending in the B2B market. So looking at this graph, this is annual revenue from total enterprise revenue from 2020 to 2024. So you can see it's been declining at a single-digit rate this whole period. It's been, the declines have been like gradually steepening the last several years. So looking at this year, so we're projecting about a 3.2% decline to about 124 billion in total enterprise revenue for 2024. Yeah, so the biggest driver is just the legacy solution customer disconnects is still having a pretty, significant impact on revenue in this segment. We still see wireless growing, but it's being offset by that lower wireline revenue from those legacy solution customer disconnects. Still expect this trend to happen at least in the next several years. We'll still see single-digit revenue declines from the B2B market. So next few slides, we're going to take a deeper look at wireless revenue, and after that, we're going to take a look at wireline revenue specifically. So you take a look at this graph here. This is TQ24 U.S. operator enterprise wireless revenue and year-to-year revenue growth. So basically looking at the bubble graph, the x-axis is total enterprise wireless revenue that they're generating on that x-axis, and the y-axis relates to year-to-year revenue growth with an enterprise wireless revenue. So you can see Verizon's still leading the market in wireless revenue. They grew about 2.1% in TQ24. Biggest driver of that is that they still have the largest base of the postpaid phone customers in the B2B market. So overall, Verizon's definitely had some challenges in the consumer market the last several years, but they're still performed relatively strong in B2B. It's been a benefit to them. Typically, generating positive postpaid phone net additions in B2B. That's driving revenue growth from them. Also for TQ24, there's some uplift from some recent rate increases as well. So that helps to drive the revenue for Verizon in TQ24. Looking at AT&T, they grew about 2%. So a very big driver for AT&T is still FirstNet. They're still gaining about 200 to 300,000 new connections from FirstNet. So still getting new customers from that, just driving revenue growth from them. T-Mobile, they have been growing about 11.3%. So as I said before, the network quality is a big driver of them driving revenue growth in the enterprise market. Also competitive pricing, typically lower rates in AT&T and Verizon. It's been an advantage for them as well. So looking at T-Mobile's results, their earnings calls, they're typically, constantly improving their performance, setting new records within the segment. One of the things for TQ24, they reported they had highest ever net additions from SMB customers from TQ24. That's a big driver for the revenue growth in TQ24. Also performing much stronger. Also, they've been experiencing steady growth also in large enterprise as well as within public sector also. And looking at Comcast and Charter, so they led in wireless revenue growth. Comcast growing by almost 46%, and then Charter for 29%. But you can see when it comes to actual revenue, they're still very far behind the other players in the market. So this wireless revenue is coming from their mobile plans, their B2B mobile plans. Those have been launched in the last several years. So Comcast has Comcast Business Mobile, Charter, their B2B wireless offering. It's Spectrum Business, Spectrum Mobile for business. So these businesses are accelerating. The growth is growing at a pretty high rate year to year. But if you look at the overall revenue, it's still a very small portion of their revenue overall. Still Comcast and Charter, the vast majority of the revenue is still coming from wireline services. Look at some of the key trends that we're seeing in the wireless market in B2B. So smartphone connection is the most prominent driver of wireless revenue for enterprise operators. Yeah, most of the revenue growth is still just coming from the smartphone connections. There's still opportunity there to sustain net additions in that segment. Still see a lot more businesses implementing smartphones. I'd say security and privacy is a big driver for that. Especially in the move to hybrid work, you have more employees needing to access corporate data, corporate applications. They need to use their mobile devices to do that. That can be, security concerns for businesses. So we see more businesses giving their customers corporate devices to help to ease our security and privacy concerns. Another big driver is the first responder initiatives in B2B. We'll talk a little bit more about those in upcoming slides. We're seeing IoT being a driver as well. If you look at AT&T and Verizon, substantial IoT connections are being added every quarter. It's been, recent quarters, AT&T and Verizon have been, reporting 1 million plus IoT connections. But looking at overall, it hasn't had a very significant impact to revenue. So if you look at these IoT connections, they're usually very, very low ARPU, lower average revenues being generated by these devices compared to something like a smartphone, where a smartphone might be, $40, $50 a month in B2B, where, an IoT connection might be immaterial, less than $1 or so in some of the connections. So even though millions of connections are being added, it's not having a significant impact on revenue. Example would be like AT&T. They gained 12 million wholesale net additions from connected car in 2023. But definitely things like the smartphone additions from FirstNet, those type of things have a much more significant impact on overall revenue. So moving on to the next slide. So we're looking at FWA within the B2B segment. So we've got two graphs in this slide on the left. So we've got the top left graph that's tracking total FWA business subscribers from TQ23 to TQ24. So you can see those been growing steadily for those three operators, AT&T, T-Mobile, and Verizon. And then we look at the bottom left graph. So this is basically their total subscribers at the end of TQ24. So you can see Verizon's leading the market in B2B, so 1.5 million connections for B2B. It's a reported number that they give out. T-Mobile, so we're estimating they have about 866,000 connections at the end of TQ24. So if you look at T-Mobile, if you look at their whole FWA connections, they're still leading Verizon when you consider consumer. But if you look at just B2B, we're projecting Verizon still outpacing them by quite a significant margin there. That's mainly because of Verizon's larger overall B2B base. There's much more customers to cross-sell FWA services there. That's been an advantage for Verizon in the B2B market for FWA. Then looking at AT&T, so we're estimating about 188,000 connections in B2B. So AT&T has been interesting the last several years. If you were to go back, 2-3 years ago, you'd see AT&T really downplaying FWA. You definitely see them prioritizing fiber over FWA. We've seen a change in tone from AT&T. I'd say the past year, they've become much more positive towards FWA. I'd say a big driver of that is just a C-band deployment. So much more C-band is out in the US. I think over 2 million they have right now, 2 million POPs coverage over that currently. So there's much more opportunity for them to offer higher speed FWA services through that. Much more capacity with that also. So becoming much more positive. They've also been very, they've also spoken about the B2B market specifically. They see some favorable economics in B2B for FWA, especially in comparison to consumer. The example would be looking at data usage, consumer versus business. If you were to look at a typical consumer FWA customer, they might be using very high bandwidth use cases. They might be using, they might be streaming HD video, hours a day. They might be using online gaming. They might be using this type of very bandwidth intensive use cases. Whereas a B2B customer, I mean, a lot of them, they're going to be using much lower bandwidth use cases. They might be using FWA for something like checking email, browsing the internet for work tasks, this type of things. Those things are much much lower in bandwidth typically. So that gives AT&T like favorable economics in B2B compared to consumer. So they're seeing that. They also see more bundling opportunity within B2B compared to consumer. So we see AT&T, definitely changing their outlook on FWA, becoming much more positive towards it. Looking at the right side, some key trends we're seeing. So T-Mobile and Verizon led the U.S. and B2B high-speed broadband additions in Q24. So it's driven by FWA, so that enabled both those operators to outpace the cable operators in B2B broadband additions in Q24. We see AT&T increasing focus on the B2B FW market via the new internet era for business service. So they just launched a mid-band 5G service specifically for FWA. I think it launched at the end of March. So definitely increasing focus on targeting the B2B market. Before they've had B2B FWA services, but I mean, it was mostly LTE. I think they had some low-band 5G FWA services in the market as well. But those type of services are not going to really compare to the cable and fiber services out there. Offering B2B FWA on mid-band spectrum is going to be more comparable to some of the the higher speed fixed broadband options in the market. So we expect AT&T should have some acceleration in the broadband net additions in the B2B market through the rest of the year. We saw uptick starting in Q24, so we think that's going to accelerate and that momentum is going to sustain through 2024 into 2025. So drivers at FWA subscriber growth, cost savings. I'd probably say that's the biggest driver. Offering cost savings over the cable providers, over the fiber options in the market, and also the speeds. They're not going to be as fast most of the time as like a DOCSIS 4.0 service or a fiber service. You're not going to get the multi-gig speeds yet from FWA, but for everyday use cases for many businesses, it's sufficient, and the cost savings are worth it for them. They don't need to opt for the higher price options in the market. That's been driving adoption. Also, just the ease of installation is a big driver that we're seeing too. We see a lot of businesses opting for FWA just because it's easier to install compared to a traditional fixed broadband service. It might be like a business that might be rapidly growing. They're launching new locations. They might not have the time to wait around for a technician to come out to install a fixed broadband connection. So a lot of those type of customers, we're seeing them opt for FWA over traditional fixed broadband. I also see FWA serving as a failover solution, providing businesses with backup connectivity, especially the larger enterprises. We're see them doing that. The larger businesses, a lot of them still, they want the primary connection to be, a high-speed fixed connection. They want like the fiber service and want the high-speed cable option. A lot of the large businesses are still opting for the fixed broadband. SLA requirements is a driver of that too, just having be more stringent with that. But we see them opting for FWA also more as a failover solution. So they'll have the fixed broadband as a primary connection, then using FWA as a backup solution. For whatever reason that primary connection is disrupted, they'll have FW in place as a backup solution. Looking at the bottom, some of the ideal types of businesses for FWA. So I see a lot of the smaller businesses opting for it, things like a small retail store, restaurants, coffee shops, medical and dental offices. So less intensive use cases like using FWA, just for internet access, supporting point of sale terminals, those type of things. Those things are very ideal for FWA. And remote locations too, like businesses that have locations that are more remote in nature, things like construction sites or food trucks. Those are very ideal types of businesses for FWA as well. So next slide, we're going to be looking specifically at the wireline market in B2B. This graph is TQ24 U.S. operator enterprise wireline revenue and year-to-year revenue growth. So you can see AT&T, Verizon, and Lumen, they're still leading the segment in total wireline revenue, but definitely experiencing some challenges. All those companies had declines in TQ24. It's been pretty consistent. Those companies have been reporting wireline declines. I mean, it's coming from the legacy solution customer disconnects. It's getting offset by the fiber deployments partially. I mean, those three companies have been pretty aggressive still in expanding fiber. They're still gaining new customers per quarter, but it's getting offset by those legacy solution customer disconnects. And then looking at Charter and Comcast as well, so they were able to grow in TQ22, and they're still sustaining single-digit revenue growth in wireline. There's definitely some challenges. Looking at Charter, it shows about 2% revenue growth in TQ24. They're still gaining B2B customers for broadband. It's been definitely slowing down over recent quarters. And looking at Comcast, they're able to grow about 5% in TQ24, but they've actually been losing broadband B2B customers the last couple quarters, the last several thousand customers from the FWA competition. So definitely facing pressures in the market. The next slide, we're taking a deeper look at convergence within the industry. This has been a hot topic, I'd say, the past year or so. So when we're talking about convergence, just an easy way to look at it is just operators having the ability to cross-sell mobile and broadband services together. There's multiple benefits from this strategy, both for the operator and the customer. So for the operator, offering these converged service bundles of mobile and broadband together, that creates a greater value proposition and a stickier ecosystem to retain customers long-term. Just historically looking at operator metrics, looking at the customers in the bundled service plans, historically those type of customers have had lower churn compared to non-bundle strategies. This is definitely an area that operators are looking to capitalize on. And looking at the customer point of view, there's the benefits also. I'd say number one is it's a better value proposition for the customer if you're enrolled in both mobile and broadband services from the same provider. You're typically going to get a cheaper discounted rate. You're going to be paying less compared if you're to buy those services separately from different operators. So it's an advantage. It's also just more convenient as well. That's been a driver for adoption as well, just having the convenience of being able to have your billing from one provider instead of two separate providers. That's been a benefit for the customers. Things the operators are doing to strengthen the convergence strategies, we have three things. So one would be expanding broadband service availability. So we see FWA that's expanding to more businesses and households, that's driving convergence. And also fixed broadband's expanding as well. You see AT&T, Verizon, and Lumen, they're expanding their fiber footprint. Cable operators are expanding their broadband footprints as well. So there's more cross-selling opportunity. The operators are able to capitalize from that. We see the cable cos launching B2B wireless offerings. So we had Charter and Comcast launching their offerings about a couple years ago or so. We see some of the smaller players looking to capitalize on it too. Like a smaller cable operator would be Altice USA. They launched a B2B wireless offering earlier in the year. So they have that opportunity now to offer the converged bundles to businesses. And then we're also seeing the operators are pursuing acquisitions to strengthen the conversion strategies. The big examples would be Verizon and Frontier, and also T-Mobile has a couple acquisitions that they're targeting with private equity firms. It'd be Metronet and Lumos. So looking at the Frontier acquisition, so basically looking at that, Frontier is offering fiber to 7.2 million locations currently. And as this acquisition closes, they're looking to expand that to 2.8 million additional locations by the end of 2026. Yeah, so basically if this acquisition gets approved, Verizon is going to have that opportunity to target 10 million fiber locations. So they're going to have the opportunity to target the fiber services through that, like the legacy Frontier services, to continue to build that. But there's also going to be a lot of cross-selling opportunity with that, both in the consumer market and also B2B there. So, target things like mobility, IoT, MEC, and PCN, those type of services. There's going to be a lot of opportunity to target those fiber B2B customers from Frontier if the acquisition gains approval. And then looking at T-Mobile, their two proposed acquisitions, so they're partnering with KKR, it's a private equity firm. They're looking to acquire Metronet. So that gets approved. They're going to build out fiber to 6.5 million households by the end of 2030. They're expanding Metronet's fiber to that many households. And if the other one is T-Mobile and EQT, so another private equity firm, they're looking to acquire Lumos, and that gets approved. That's expanding. It's going to expand Lumos's fiber footprint to 3.5 million households by 2028. So looking at that, if those two acquisitions get approved, T-Mobile's opportunity to cross-sell their mobility services with fiber, that's going to expand to 10 million households. There's also going to be the B2B opportunity as well. Both Metronet and Lumos compete in the B2B space. They offer B2B broadband solutions as well. So there's going to be some cross-selling opportunity in the enterprise space for T-Mobile too from these proposed acquisitions. All right, next few slides, I'm just going to touch on some of the top trends we're seeing in the customer segment. So this slide here is dealing with large enterprise. So again, large enterprise would be any business of 1,000 or more employees. Looking at the positioning on this slide, so you can see Lumen, Verizon, AT&T. They have the highest revenue, but they're the ones experiencing the declines in the segment. Looking at those three companies, very strong client base historically, especially with the Fortune 500 companies. It's been a benefit to them. But also a lot of their legacy solutions, they're deployed within the large enterprises. So they're seeing some pretty significant enterprise revenue declines from that within the large enterprises. If you look at T-Mobile, Charter, and Comcast, you still see them trailing the big three in the market in terms of revenue, but they're positioning for growth. You see all those companies generating revenue growth in TQ24. Looking at T-Mobile, that's been an emphasis for them, I'd say the past 5 years, getting traction in large enterprise. They've been very much, historically very much focused on the SMB market. They've really increased focus the last 5 years on large enterprises. Big thing they're doing is portfolio expansion, things like PCN, MEC, IoT. They're playing more in those markets now, so that's helping to attract some of the larger businesses. Also have a much more robust ecosystem as well to support this type of solutions. Just the last several years, there's been some partnerships with companies like AWS, Google Cloud, Dell Technologies, Ericsson, and Nokia around PCM and MEC. So having those partnerships in place is helping T-Mobile drive growth amongst the large enterprises. Also, being the first to 5G standalone, also in the U.S., has been an advantage for T-Mobile. They're attracting some customers through that. Also, network slicing development is very early stages, but T-Mobile's had some commercial network slicing use cases being explored that customers are exploring. Some things like SASE, so they have a dedicated SASE solution with network slicing. Some other use cases are targeting with customers tend to include video production and video calling solutions. So they're getting some early traction in network slicing as well. So it's been helping them gain traction in the large enterprise market. Then looking at Comcast as well, similar to T-Mobile, Charter's the same also. Those three companies very much focused on the SMB market. They're both they're all increasing focus on the large enterprises. Big play for Comcast for the enterprise strategy is partnering with more operators globally. They have their customers in their own markets, or Comcast has their wireline market. But many of the large enterprises, they're either going to be a national or even an international business. So having those roaming partnerships with other wireline providers, providing wireline access across all locations, being able to support customers that are off-net customers, like customers that have operations outside of Comcast wireline footprint. That's been helping Comcast gain traction in the large enterprise market. Also, the Masergy acquisition as well. Masergy has created a lot of cross-selling opportunities as well for Comcast, which is helping to drive growth in large enterprise. So looking at Masergy, basically the time when they acquired that, Masergy had 1,400 customers across 100 countries. So a lot of cross-selling opportunities to target those customers. Also leveraging the Masergy acquisition as well to target those Masergy solutions to their existing connectivity customers, like the Comcast broadband customer. They have that opportunity to sell like solutions from Masergy, things like SD-WAN and security, UCaaS, those type of solutions as well. Touching on SMB, so one of the things we're seeing in SMB, most of the FWA disruptions is having SMB more so than the larger enterprise. That's been a benefit to Verizon and T-Mobile. It's been helping to drive the revenue growth in SMB. So that's been, creating pressures for the cable operators. But if you look at the other side of things, the cable operators are creating some disruption also in the B2B market as well with their wireless offerings. So looking at Comcast and Charter, their B2B wireless brands, they're limited to 20 lines. So it's essentially just a small business play. So the disruption they're creating in wireless is just impacting the small business market currently. Possibly in the future, they might be able to extend that to more, to more lines, target larger businesses, but it's capped right now at 20 lines. So that's creating some pricing pressures in the SMB market, especially for T-Mobile and AT&T and Verizon from that. And then looking at public sector, so this has been the, I say it's been the most promising customer segment in the B2B segment. So you can see on this graph here, all of the operators are able to sustain public sector revenue growth in TQ24. Looking at the positioning, so we see AT&T, Verizon, and Lumen. So collectively, they're generating about 80% of public sector telecom revenue. So those are the big three historical players in public sector, especially looking at the federal market. They have a deep established client base with federal agencies. So that's been an advantage for them in public sector. But you see the other players, T-Mobile, Comcast, and Charter, they're also gaining traction in public sector. One of the things that we're seeing, if you look at the three companies, T-Mobile, Comcast, and Charter, historically, they've pretty much just targeted state and local agencies. It's been an increased focus lately, I'd say the last 5 years or so, and targeting the federal market as well. Looking at things like Comcast, they acquired Defined Technology several years ago, so they can compete for federal contracts too now, like things like EIS. They're able to compete for EIS through that acquisition. Charter is also competing more in the federal market as well, so you have some partnerships in place, such as AOC Connect and Core Technologies. Those are enabling Charter to compete in the federal market as well. So looking at T-Mobile, so we've seen them making traction in the public sector. One of the things they've been able to do is through the public sector, is through public safety. So looking at them, they're still trailing quite a bit compared to AT&T FirstNet and Verizon Frontline when you're looking at public safety revenue. But they've been gradually gaining traction in public safety. So one of the big announcements from T-Mobile recently, they actually won a contract with the city of New York. So basically, they launched a new service leveraging network slicing for first responders called T-Priority. So from that, they're able to get a pretty large-scale contract from the city of New York. So that might be, a pretty good projection. That might be a catalyst for T-Mobile to get some larger deals within public safety, especially becoming more credible, winning a large contract with that. Hopefully that's going to spur some larger deals as well, some additional large-scale deals for T-Mobile. So looking at some key takeaways from today, summarizing things. So total B2B revenue for U.S. telecom operators will continue to decline for the next several years due to legacy wireline solution disconnects, which will offset higher wireless revenue in the segment. We also see wireless revenue growth in the B2B market remains driven by smartphone net additions. Emerging segments including PCN, MEC, and IoT are growing, but still account for a minimal portion of total B2B revenue. We see smaller players in the B2B market, including T-Mobile, Comcast, and Charter, are gradually gaining market share, driven by portfolio expansion and increased focus on targeting clients in the large enterprise and public sector segments. Also, lastly, we see the public sector experiencing the highest revenue growth within B2B customer segments, driven by first responder initiatives and large-scale federal contracts. All right, that wraps up my slides. Some time to take some questions. All right, so I have a question here. So it says, I think Comcast and Charter Wireless for B2B is very limited as they have cap from Verizon for 20 lines. Do we expect new MVNO with T-Mobile and maybe later with AT&T to resolve it? There's definitely a possibility. You know, I think it'd be a great opportunity to be able to secure an agreement, either with it be expanding their existing agreement with Verizon or possibly farm MVNO agreements of other operators to expand more than 20 lines. There'd definitely be a strong opportunity for Comcast. I don't have information, any concrete information, if anything's like transpiring or anything like that, but that definitely would be a very, that would provide a lot of opportunity for Comcast to expand their footing, especially targeting those larger enterprises, gaining that advantage. That's definitely something I would say that's kind of limiting the cable providers in the enterprise market, not having a dedicated wireless offering. So a lot of the large enterprises, they still want to have the mobile services and the wireline services from their providers. So that's definitely been something that's been limiting the cable operators in a large enterprise. That would definitely be a beneficial route for Comcast if something like that could transpire.